Hi, how are you? कैसे हैं आप? Okay, now this week has been very significant because we've been advising people about certain investments, and the thing is that the market is like that you know buy at dips is the thing which I even spoke about in my last live, which was actually a week back. I mean, I have not been able to do lives because I've been really very busy, and it's been a very hectic week for me. So I'm sorry for that, but I'll try to make live more frequent. But I've been making shorts and all that, where I come up with some suggestions and all that. So it's like, it's been a week where you one realized that you have to kind of be patient. The market is doing really very well, and in fact 21,500 is where most of the experts see the market in a very short run. Okay, before this rally pauses, there will be substantial growth. Okay, so now what to do in such a market? Now, you know uh, you just can't sit and wait for the dip to come, and you just can't invest also, because stocks are actually most of them are touching highs, record highs, 52-week highs. Zomato recently touched its 52-week high. So it's been, so when to invest actually, and which stock to invest, because you buy a stock which is very expensive and then you crib about it and all that. So now what is being happening is that you have to really pick and choose stocks which still have some upside left, and which have strong fundamentals also. Quarter one results are around the corner, so that will also impact the stock. The stock which is doing well today might just crash because of a bad or not so good quarter one. So now what happens is that in such a scenario, I'll be discussing some stocks which have some upside left, and some whose quarter one have come, and and the quarter one has been good or whatever, and still there's a buy on those stocks. And also some stocks which have the potential, even if the first quarter is bad, they are good stocks. They have been doing well, they have good valuations, they have been performing well, their fundamentals basically are good. I generally give stocks or decide on stocks which are actually fundamentally good. I'm more inclined towards the fundamental calculation, not so much into technical. Technical is also a part of it, but fundamental evaluation, according to me, is the best evaluation. Technicals are important, but the calculation fails if the fundamentals of the company is not good. So the fact is that you have to look at both ideally. Okay, you should keep a watch on both. You have to see the charts, you have to see DMAs and all those things, but according to me fundamentals are important. Okay, such example is TCS and IT stocks. Like Wipro has come out with its quarter one result, and which is muted, and HCL Tech and TCS happened on 12th July. But still TCS is a buy, mostly because of its fundamentals. It's a strong company, it's a bellwether company, and brokerages are also now giving buy on those on TCS. In fact, the new target for TCS is around 3600. Okay, so such stocks are there which have good fundamentals and which have a good future, but you have to be patient with these stocks. You can't just keep looking at them. Oh, it's down today, and after a month it's down and all that. You really have to faith in these stocks. So please use your discretion about the stocks which I am discussing, because I have faith in these stocks. That's why I'm talking about them. And also talk to your advisor. Okay, and look at your profile. Now most of the people are asking me, why is the market doing well? I should have actually answered this question long back, but markets are doing well. If you look at the world, most of the markets are doing well. It's a rally, it's a combined rally. But apart from that, if we come to India, the commodity prices came down, the inflation came down, uh, GDP growth figures came out good. In fact, the FY24 figures were 7.2%. Okay, inflation came down. Okay, quarter four earnings were pretty decent. If you look at most of the companies, so they were pretty decent, more than expected in most of the in some cases. Okay, and also FIIs poured in money. FIIs were back. I have discussed this earlier also. 70,000 crore rupees they added in only 3 months. Okay, and also uh, market is buy at dips, and IT stocks can do well, and mid caps and small caps rallied. So it was a broad rally. It is a broad rally which is pushing the market up. So this is a solid rally. This is not a rally which will go kaput. Okay, but there will be a correction, and in fact most of the bullish kind of advisors and experts, they are saying actually you should take off some money. You've earned some money, so take some money off the table, enjoy the the profits or whatever. Enjoy your patience has been rewarded, so enjoy that money, and then you can again enter the market when it's dipping. Don't sell your good stocks. I'm not saying that. So you can partially book some profit, and then reinvest that money or whatever you want to do. Okay, so take your call, and then of course you can decide what you want to do with your money. Also, why markets have been doing well where India has been seen as a good place to invest in. China plus one factor, FIs are pulling out of China, investing money in India. Amongst emerging markets, that investment chunk, India's share has increased, it has gone up. Okay, so these are most of the reasons why the markets, Indian markets, are doing well. Also, in fact, in the last 13 months, the number of retail investors opening their accounts has also gone up. So that is good. People have faith, and more people are investing in the stock market. And if you don't want to invest in stocks, I always say this. And if you want to invest in stocks also, please invest in mutual funds. That should be actually the base of your portfolio. Okay, so all this said, because some people are asking me that you should give a background why the markets are doing well and why this rally, and if this rally is going to continue, then up to what level. Okay, we know this. All these indexes, they've hit their record highs. Nifty, Sensex, mid cap 100, Nifty mid cap 100. In fact, financial Nifty has also done well. It corrected a little bit, but it has also done well. Nifty Auto has done well. Okay, so all the sectors, FMCG wala bhi has done well. Okay, now if we look at the ladder, the preferred themes or areas or pockets where FIIs and smart money is going in are banks. Now this is in order: 1, 2, 3, 4. Banks, then auto, then pharma. Pharma is back. I said this 3-4 months back. In fact, uh, in the beginning of this year. Okay, pharma third, then fourth is IT. IT is also back in reckoning, but you have, this is a long term bet, IT, and because the valuations are pretty decent for IT, so you can look at it. I love IT. I've never removed all my money from IT. I reduced my amount of investment, but I never moved out of IT. Fifth is industrials, sixth is FMCG, seventh is hotels. Okay, so these are the seven uh, themes or pockets, whatever you want to call them. Okay, auto hai na isme, yes, so second is auto. Okay, so these are the themes where you can look at stocks or ancillaries or stocks related to them. Okay, isme defense nahi hai, there should be defense also. So 2.1 defense, how can I forget defense? No way. Okay, so these are 8 themes, okay, where you should definitely put money. If you don't have a lot of money, banks, defense, and auto for you. Okay, these 3 you should currently ride the wave on. Okay, now if we go into this these quarter earnings, discretionary spends are up. In fact, jewelry stocks have done well. Titan's result was good. Jewelry sales were up, and Kalyanjewellers is also on a high. I remember during Diwali, around 102 was the stock was at, and now it's really jumped. Okay, so but you, that's been a long time. Okay, if you've been patient with that, and Senco Gold made a debut today, and it's the IPO has done well. So this is discretionary spending is also doing well. Of course, we are in that K-shaped recovery. So the premium segment is doing well, and the bottom is still to catch up. SUVs are doing well. All these auto companies, they have new launches. They launched new things. 400cc segment is seeing a big competition. Uh, Bajaj and Hero Moto and Harley Davidson also, we saw the new launches and all that. So these segments in this 2 lakh premium bike segment, the 2.32 lakh something, the competition is heating up. So this is the premium segment. So now you know where to target your money, okay, and plan it in a way, and keep checking it, of course. Okay, so now this is not a small talk, actually a long talk, because people were asking me, my clients also including, and someone was asking me that where what are the pockets, and why is suddenly there's so much of uh, jump in the stocks, because some actually missed this rally. They didn't see it coming. And of course, I didn't speak about defense quite a lot. It's my favorite. I speak about it all the time. We know defense stocks are doing well. There's a government push to defense, Atmanirbhar thing, and the PM is now in France for that deal and all that, that engine deal, and then the falls, and so, and those being now manufactured in India. So BDL and HAL, they've actually touched 52-week highs. So if you want to buy them, you have to wait for them. And in fact, even infra stocks like RVNL, I've spoken at length about them, about the RVNLs and all that. In fact, today also it has bagged some order from NHAI, RVNL. Yeah, it has bagged an order from NHAI. So now these are some stocks: Mazgaon stock, Mazgaon dock, and then Cochin shipyard, Green Reach shipbuilders. So all these stocks are in stocks. Okay, you might be hearing about them quite a lot, but there is a reason behind why they are. Some are actually decently valued, have decent valuations, but some are expensive. HAL is expensive now, but you can still look at RVNL. I think today it is at around 120 or something. Okay, I will not go into RVNL because I've spoken a lot about RVNL. So I will not talk about RVNL today, but that doesn't mean it's a bad stock. It's a very good stock, and I said it's getting new, uh, it's got new orders. Okay, some 808 crore worth order from a letter of intent it has got from NHAI. Okay, so now, okay, I'll now talk about some stocks. It's been 14 minutes already. So because I speak about stocks, and almost all of the stocks, and touch wood, thank God, all of them have done well, and I feel very happy that that's a good thing. I mean, I don't think so any of those stocks have done bad, not even one actually. Okay, so today the first stock that I will talk about, Zentech, was one which I spoke about in my last video. If you have not bought it still, please buy it. It has bagged a new order, 160 crore rupee worth, from Ministry of Defense, and it is just going to increase its order book. It's just a side note. You can treat it as a side note. Reliance also has a new target of 3685. It is not going to that 36 level, a 3000 level only, but it has a new target of 3685. Okay. Okay, this is also a side note. Yeah, 3685. Okay, so the first stock about which I'm going to talk today is Jamna Auto. Okay, now this is a stock about which I have not spoken much. Now this company is into making it's auto ancillary company, and its new target is around 130 rupees. Currently it is trading at some 110, 112. Let me see. Yeah, 112 it is trading at. It is up 2% today. and this is basically into suspension and supply for commercial vehicles. And as we know, commercial vehicles have done well. Okay, it's a uh, it's a mid cap stock. ROE is around 22.9%, 23%, and ROC of the company is 27.5%. The stock took a dip in December. It started coming down. Before that, it was really doing very well in last year. It came down a little bit. 105 ऐसे आ गया था, 198 something. Then it further dipped in April this year. Okay, but now it is again breaking out, backed by good volumes. Okay, the company has why it is coming up again. Company has reduced that, and auto sector is doing well now. Okay, that's why. And it's a debt free company, and dividend payout bhi hai company ka. Peer comparison also it stands good. Okay, 27.54% is the ROC. It's above Sundaram Fashion. It's above Bosch. Okay, it's above Samardhan Motherson Sumi. Okay, around 27.54% is the ROC of the company, and quarterly results were good, from 41 crore net profit to 52 crore rupees is the profit reported in March 2023. If you look at the year on year thing, 141 crore rupees was the profit last year, and this crore is 168 crore rupees. ROE of the company, as I said, has been good. It's in the early 20s, 23% for the last year, 20% in the last 3 years, and in fact 20% in the last 5 years. It's you can keep it, you can hold it, and it's not very expensive actually. Expensive as compared to other stocks. Okay, we are not looking at the face values of the stock. I don't think so. We should look at them in the Indian context. Promoters have 50% of market share and stake in the company, and 32% is with the public. So Jamna Auto is a good stock, and because the autos are doing well, you can ride this wave. Okay, so first one is Jamna Auto. The other one is Ujjivan Small Finance Bank. Okay, its quarter one was good. It's around 41 rupees currently. It's trading at that level. Let me see the chart. Okay, it's 42%, 42 rupees today, around 2% up hai aaj. And face value of the stock is 10 rupees. And if you look at the chart, it has really done well since last August. Okay, it's just gone up. In August 2022, it was around 15 rupees. Yeah, so it has just climbed. This is backed by volumes. This bank is expected to give good quarter, and profit growth rate is around 176% CAGR over the last 5 years. If you compare with the peers, this has the best ROCE. Okay, even higher than HDFC, ICICI Bank, Kotak Mahindra, Axis Bank. This has an ROCE of 10-11%, whereas they have around 7. HDFC has 7%, ICICI Bank has 7%, Kotak Mahindra Bank has 7.3%. If you look at the quarterly results, net profit is up from 293 crore rupees to 310 crore rupees, and net profit has gone up. It was in minus 415 crore rupees to 1100 crore rupees. Okay, stock is up around 40% this year. Loan growth has been up 34%. Deposits are up 44% year on year, and 4.4% quarter on quarter. Interest rates may high for some time. This is what the management is saying, and this might help the banking sector. Okay, if you look at the ROE, return on equity, then last year the return on equity was 31%. As I said, the stock has just jumped, and before that it was around 7% for the last 3 years. Okay. uh, Shareholding pattern, promoters have 74%, 73.6, 74% of shareholding in the bank. So this is a good stock to buy. It's not very highly priced, it's not in thousands, it's 41, 42 rupees per share. Okay, so Jeevan Small Finance Bank is the other second stock which I'm suggesting today. Otherwise, I already told you about Kalyanjewellers, and because Titan is very expensive, you can go in for Kalyanjewellers. I have that stock and it has given me good returns. Okay, you have to use your discretion. So even I spoke about Godrej Properties in my last video. It has also touched 52-week high. It was at around 1616 when it touched its uh, 52-week high. 1616, yeah. Okay. Okay, now the other interesting stock is, I'll just talk a little bit about Zomato. Now Zomato is its new target price has come. It's around 86 rupees. I'll just look at its chart. It was around 81. It's today 82.8. Okay, so someone was actually asking me a question on Zomato because I spoke about it in my video, which was I think 2 3 videos back. So yes, it is still a buy. In fact, FIIs are pouring money in Zomato. Okay, so because of it showed some good earnings, good revenues, and some new initiatives by the company. So it's backed by volumes. So actually, smart money, which is FII money, is now pouring in Zomato. In fact, even in Paytm. I think I told you in that video that I have bought Paytm again, and now I've also bought Zomato. So this is news, breaking news. The company has reduced its debt. These are the reasons why Zomato is back in reckoning, and it is expected to give a good quarter. Of course, the negatives are more for the company, but ROC is in fact still in minus 5.29. But I have allocated a very less amount of money for Zomato because this can be a multi-bagger in the long run. They have reduced their debt from they've reduced their debt. कितना कम किया है? See, earlier their ROC is in minus 5.29. Okay, and earlier the net profit was minus 347 crore rupees, and now it is this year, last year, that was minus 347 crore rupees. Now it is minus 188 crore rupees. Okay, and they've reduced their losses from minus 1220 crore rupees to minus 1015, and net profit they have also reduced their loss. It was 1222 crore rupees the loss, and now they have come down to minus 971 crore rupees. Okay, so the return on equity was minus 5% last year, but their compounded sales growth has gone up. Okay, in the last 3 years that was 40%. Now it has, till the time TTM is 69%. Okay, so this can be a multi-bagger company, but it has its share of risk. You have to take your call. I have bought this stock, and so has the FIIs, FPIs. Shareholding pattern is FIIs have, see, they have the largest stake in the company, 54.6%. Okay, that is what I was telling you. DIIs are holding 8%. Public like me has 35% of stake in the company. So you can take a call on Zomato. I'm not asking you to buy Zomato. I'm just giving you an update, because if the stock does well and you'll say, okay, you didn't talk about Zomato, whatever. And because personally I have bought this stock. We order food from Zomato. We order food from Swiggy. Swiggy is not there. We order from Zomato. We are continuing to eat, and we will keep ordering. I think I will. Okay, I'll close this Zomato thing. Okay, so Zomato was a side note. Okay. The next stock that I was wanting to talk was TCS. Okay, now someone was asking me, should they buy, hold, keep TCS? Well, I will say yes, and so are the brokerages. I said earlier that its target is up, and the brokerages are also saying that yes. But when I was watching the results, then also I thought that no, we should keep TCS. Net profit was up 16.8%. Revenue was at around 59,381 crore. This is a bellwether company, and if we compare it with the peers, its ROC is around 59%. I'll just check again when I see the chart. But this is a, I don't think so that uh, you should lose faith in TCS. See, this was also the case with HDFC when there was this merger thing and all that, and the stock crashed. Even at that time, I said, please don't throw it away. And actually, many people did not. So now you look at HDFC. Same is the case with TCS. Okay, it's the largest IT tech company. You just can't lose faith in such a company. The way they operate is also clean. The fundamentals are clean, and in fact, the management itself has said that some of the orders are taking, execution time is taking a long time, and but there are orders, and there is not a lot of depletion in the orders. People have not pulled their orders back. The company revenue has grown 4% in dollar terms, and numbers were muted, and that actually was estimated. Now that has also happened with HCL Tech. Why tech stocks are up? And actually they keep going up and keep going down. But why they were up despite of these muted numbers from HCL Tech and even TCS is because it is expected. So those who have faith in IT stocks like I have, they will keep these stocks and they will keep buying these stocks. See, we need IT. Just we are talking through, we are using IT, okay, and I've been saying this for the longest period. So I will continue to hold this, and in fact, I'll buy it if there's a dip. So if those who want to sell, please sell. People like me will buy. Okay, so the EBIT margin has come a little bit from 24% to 23% due to wage hikes and all that. But if you look at the uh, global scenario and all that, IT stocks will not were not doing that well because overall markets and all, they were doing well. IT is more dependent upon external factors. But now because the US situation is improving, their inflation has come down today. The figures are better now, and actually, if you look at Nasdaq and all that, IT stocks are doing well. So these little blips of information, just restore my faith in IT. Okay, the CEO has said that they are now working on generative AI and working on projects with their clients, and also long-term demand for their services has only gone up. Okay, so TCS is another one. I'll just look at the detailed thing. So today it is trading at 3400. See, I was saying, see, there are buyers of this stock. ROE is 46.9%, around 47%. ROC is, as I said, 59%. So this is a long-term stock. Company is debt-free. Last 3 years, ROE track record is 43%. Dividend payout is also good, 64% something. And ROC, I think I've said, it is the highest among its peers. Uh, the other one is Infosys, which is like this only. LTI Mindtree is also a good company. Okay, now we're talking about TCS. Okay, so net profit has come down a little bit from 11,436 crore rupees to 11,120 crore rupees. Okay, a little bit it has come down, and net profit has actually gone up from 42,000. No, from wait, March 2022 profit was net profit was 38,449 crore rupees, and March 2023 it went up to 42,303 crore rupees. Okay, and TTM was 43,904 crore rupees. I have to update these numbers because they have come out. So last year the return on equity was 47%. Last 3 years it has been 43%. So if you are a believer in IT, and actually IT is, you should actually now start accumulating. But if, of course you have to cherry pick. So if you are looking at large cap IT names, TCS is there. Promoters have 72% of stake in the company. FIIs have 12% or 13%. Okay. Now this current buying today, like today people are buying this, is backed by good volumes also. So this was TCS. Small talk on TCS, and HCL Tech has also. HCL Tech is not in this my list, but actually HCL Tech has given good returns in the last year. Those who bought HCL Tech, they've actually made money. The thing is that those who have more exposure to international services and all that, and banking services and all, they have actually decently done well. Oh, sorry, banking services have decently done well. Exposure to international markets, they have done a little okay. Okay, now let's come out of IT. The next stock is JK Infra. Now this is actually today in news. They have the CMP is around 308. Okay, now it's 310. They have got some new orders from NHAI for ramping up. Actually, there's so much of destruction now happening everywhere because of rains. We need people who build roads. So they will be getting more orders. 20k crore rupees they are expecting their order book to be by FY27, and currently it is around 12,000 crore rupees. Okay, and they build roads and flyovers, and mainly in waterworks. Okay, 50% they are into waterworks, 42% into road construction, roads and flyovers and all that. And metro is only 2% of their share, and civil works is around 5% of their order book. So this water work and all these, we need these things when there's an infra push. This is a decent stock in infrastructure thing. I've spoken about it earlier during the time of budget. Okay, so there was a dip in the stock. See, post budget, it was rising. At that time, it was around 267 rupees. I spoke about it then. Then there was a little dip in the stock around April, which was around 239 only, and now it is rising again. Okay, yeah. So if we compare it with the peers, its ROC is decent, around 17%. Likita Infra has more, 36% is Likita Infra has the highest, and Ircon International has highest, is just next to it, 16%. Quarterly results till March, I have figures. Net profit has gone up mildly up to 74 crore rupees, and year on year they have gone up, and return on equity is early tens, around 12% last year. Before that it was 9% for 3 years, and before that 10%. Okay, if we look at the shareholding pattern, 46% is with the promoters, and next high is public, which has 30%. Okay, so this can also be a good choice in infra. It's a mid cap stock. Okay, small cap actually. Okay, so this can be a good option. Okay, J Kumar Infra, JK Infra. Okay. Okay. So now the other ones, which I will not go in detail. There is one more. Okay, yeah, Federal Bank. फेडरल बैंक इसका नया टारगेट आया है 160 रुपीज़ इसका न्यू टारगेट है आई थिंक सो okay I oh my god, it's already 36 minutes. Okay, Federal Bank, I'll just wind up quickly. If you have not bought it still, 160 is the new target. Today it is trading at 127 rupees. um, it is backed by volumes. This current high up, this bullish candles, they are backed by good volumes. And if you look at it's likely to give good quarter, and it has given profit growth of 27% of CAGR over last 5 years. Okay, if you compare with the peers, it is decently placed with 6.46% of ROCE, and it's actually results were good. Net profit has not gone up that much. That's why there was a little bit of correction in the last 2-3 days, but today people are buying again. From 964 crore rupees, it has come down to 894 crore rupees net profit in June. Okay, but year on year, like from quarterly from December to March, 856 crore was the net profit in December. From there, it went up to 964 crore rupees. Now it's come down a little bit, but that's okay. If we look at yearly thing, it went up from 1996 crore rupees in March 2022 to 3210 crore rupees in March 2023. Now TTM is 3458 crore rupees. So net profit is actually gone up for Federal Bank. And that is because of more deposits. Okay, my camera moved. More deposits, more loan book, and more participation of retail deposits and all that. So last year return on equity was 16%. Last 3 years it has been 13%. Banks are doing well, so this can be a good choice. Okay choice. Okay, because there are many other choices in banks. Like I just spoke about Ujjivan Small Finance Bank. Okay, so Federal Bank, because it has a new target, and if I have been watching this stock for the last 1 year, so it has been, the chart also shows it has been going up and down, but the results are good for the company. Up and down doesn't mean a lot of huge movement up and down. Okay, let's look at Feb. In Feb it was around 140 rupees. Okay, then it came down a little bit. So this dip can be bought. It's at 127 today. Okay, so 160 is the new target. So you can buy, you can ride this momentum and probably take your call. Okay, I'll end this live here because it's actually become very long, and I'll speak about more stocks in my actually I had Dabur in my list, and ऑटो के स्टॉक्स थे. एयरटेल का भी न्यू टारगेट है, कजारिया ceramics also, but I have spoken about these stocks earlier. So I'll end my live here, and I'm sorry I didn't spoke about a lot of stocks in this one because I was answering other questions which were related to the growth, the jump of growth holding, jump of the stock market, why the stock market jumped, and is the rally real and all that. It's not a bubble or something like that. So I was answering that in the beginning of this video. So do subscribe and share my video if you feel it's good enough, and also use your discretion before investing, and keep investing even in such times. There are stocks where you can invest your money in, and please cherry pick. Don't just ride the momentum. Don't just go for stocks which are riding a high, and please watch out for these quarterly results which are now coming, quarter 4 results, and quarter 4 results are the most important results. for a company. So I'll see you in my next live, and take care and stay positive about the India story, because the whole world is now positive about India story. So I'll see you soon. Bye. Take care.